You've been in this for decades. Talk to us about the shift in the last several months from brick and mortar to digital, both because of the pandemic and just because that's what was happening anyway.
Well, we have been in the brick and mortar development business for over 15 years. Originally was in the real estate business, which I still am. The brick and mortar regional casinos have done very well until we were hit by the pandemic, in the spring of this year, and we got shut down. But then when we opened up, we projected a certain amount of revenue, and actually we started doing somewhat better than our projections. Now, not nearly as well as before the pandemic, but better than we thought. And the reason was that people are just tired of staying home. They want to get out. They want to have some fun and excitement and action. Now, the regional casinos did much better than Vegas, for example, because you don't have to get on an airplane. You just get in your car and drive to the casino. We're right in or near major cities. So we're optimistic about that business. Now we're shut down now, but in half of our casinos, we have lots of restrictions, but we're optimistic about the long-term performance. Also, we've been helped by having sport betting in our casinos in the states that have allowed it because people like to come bet on the sports and play the other games while they're there.
Neil, you've again been in the business of brick and mortar for a long, long time. You're still in hotels and also in, office buildings, residential, and of course hotels and so on. How are they doing? You've got everything from the Ritz-Carlton in Chicago to hotels in the Midwest.
Well, okay. Hotels are suffering because nobody's traveling. When the pandemic is over, they will do better. I think that it's not going to be a long-term problem, particularly for resort hotels. Again, people want to go have some fun and travel. Business hotels may be long-term affected because people will go to less conventions or meetings because they're getting used to using the internet. Office in major cities is fine, particularly downtown. Our buildings in Century City are full. Tenants are paying rent. Residential is also fine. The internet has not impacted residential at all because you can't eat and sleep on the internet. However, in the short run, rents are down, vacancies are up in the major cities, particularly New York, San Francisco, to a lesser extent, Chicago, and Los Angeles. But that is understandable because if you're a young person and there's no action, there's no bars, there's no restaurants, people aren't working around there, you don't want to live there, and it's expensive. So they've moved out, they've moved to the suburbs or their parents. But long term, that business will be fine.
Neil, obviously, you must be pretty bullish on the economy because you're continuing to build casinos. We'll get to the online part of things in a moment. There's a SPAC involved there, but you're still building brick and mortar casinos in places like Virginia.
Yes, we won the right to do that. We expect to start construction sometime in the middle of next year. It'll take a year and a half to finish it, and we assume that the pandemic will be over by then.
Now, this Rush Street Interactive, tell us why you made the decision to go public via a SPAC. Given that you have all of this experience anyway, you may not have needed to go that way. Why that way, and what will the proceeds help you to do?
Well, we got into this business some years ago with my two younger partners, Greg Carlin and Richard Schwartz, who run the internet business. And we felt that that business was coming and was going to grow. So we developed our own platform, built up our own team, and then when the state started legalizing it, we got off to a good start. And right now, we are the number one in the market for casinos and number 4 for internet sport betting. Now, when I say casinos, I mean internet casino gambling. They're two different businesses. Some people could bet on slot machines or on play card games like blackjack, and Alternatively, you have sport betting. Many states have started to allow sport betting. Only a few have started to allow the casino games. But the projections for the casino business are that they will be a larger market ultimately than sport betting. And proof of the pudding is the fact that two of the big states that have both, that's Pennsylvania and New Jersey, the revenue being produced for the casino far outweighs the revenue being produced by the sport betting.
Now, Rush Street Interactive will be trading by the end of the year in this, merger with DMY. But I'm curious, you've already said that growth of revenue increased 370% in the third quarter over a year ago. How are you doing that, given that there are competitors out there? Are you keeping costs down? How will you continue this land grab, if you like, for online gamblers?
Well, number one, we have lots of competitors, especially in the sport betting side. But unlike some of our competitors, we're not buying market share. We're earning it. We think we have a great product, very flexible. It's our own technology. And so we have done well. And remember, on the casino side, we come from a casino background rather than daily fantasy sports, for example. So we think we have an advantage on the casino side. And we've just raised our estimate for the year, our guidance, by 20% over where we projected a short time ago. We should do 265 to 275 million of revenue this year. So we're feeling very good. Now, one thing I think is important to note, that is that after our merger is completed, we will have 230 million of revenue on our balance sheet with no debt. And we started our internet business with 50 million of capital, the majority of which was put up by me and the rest by my two partners. So we've been able to build this with a relatively small amount of capital. And we're very optimistic about where this business is going.
Well, Neil, it's going to places like Virginia, Michigan, and Iowa, apparently, once you do raise this $230+ million. Those are the states that you plan to expand to. Are you worried at all about discretionary cash and about what this pandemic has done to the strata of society that would want to game?
Yeah, we do worry about that, but I think you should recognize that most people who are gambling, have a certain amount of capital in the first place. So, if you've lost your job and you don't have any money, you're not likely to be gambling. The other side of it is people are dying to have some fun, and I cannot overemphasize that element. I've been home myself, and it's not fun like your normal life. So we're optimistic about the future, but clearly people will like betting on the internet at times, and that's a growing business.
Speaking of trying to have fun, you're also very involved with the Whitney and other museums around the country. Talk to us about when you think that museums will start to feel comfortable that they can survive again, and do you see many across the country just not surviving this?
Well, we are fortunate. We're surviving at the Whitney. I'm also on the board of the Art Institute, which is surviving. We have a good endowment that helps us. No question that business is slower, but far fewer people are coming. But the good museums have a good annual customers. And if you go to the museums now, it's a great time to go because there's hardly anybody in there because people are afraid of, want a social distance, but they're large buildings and you can wear a mask. And so they will survive. And by the way, the art market has remained very robust. So stock market's up. That's another reason when you mentioned, will people have money to gamble? People who own stocks have done very well. So, yes, unfortunately, there's unemployment and many are suffering, but many are doing well. So I think that the casino business will do well because we depend on people who have discretionary funds.
Well, also, for those who don't want to game and don't want to go to museums, there's also the Sox and the Bulls, and you're a minority owner in both teams. Neil, when do we see sports getting back to normal, and what do you predict for your two teams?
Well, for the White Sox, I'm wildly enthusiastic because after a few rough years, we got a great young team. and we made the playoffs for the first time, and we're considered definitely an up-and-coming team with some great young players. The Bulls have a young team. We just got a new manager and general manager, new coach and general manager. So I think we're optimistic about the future of the Bulls, but it'll take some time because we have a young team that we've got to grow it up.